For educational purposes, we're going to look at what happened before September 9th, where the Dow dropped almost 400 points. These are all New York Times, but on September 7th, between 12:30 and 1 o'clock, there was $6.4 million in calls versus $1.1 million in puts. Then again, on September 7th at 3 o'clock to 3:30, there were $3.2 million in call versus $1.1 million in puts. Now, this showed that there were probably too many bulls in the market at that point. Then on September 8th, the market dropped a little bit, but around 12:30 to 2:30, there were $21 million in calls versus only $3.6 million in puts, which means we're setting up for a big drop. Now, on September 9th at 10:30 to 1 o'clock, after the market had fallen quite a ways, we had $7.9 million in puts and versus $3.4 million in calls between 10:30 and 1 o'clock. Then on September 9th, between 1:30 and 2, we had $6.5 million in calls versus $2.6 million in puts, which kind of canceled out that put buy and forestalled the rally, which wouldn't happen until the 13th.